Hey guys, and welcome to the Working Money channel. So the Kobeissi letter posting this: Japan's stock market falls nearly 4% as investors prepare for President Trump's Liberation Day. That is April 2nd, guys. I recently did a video on that, and I will link that up here if you haven't seen it. Check this out, though. This is Japan's Nikkei. That has already dropped. As of the time of this recording, the Nikkei has already opened, and, by the time I post this video, I think regular stock markets are going to be open as well. Unfortunately, I do think we still, here's a prediction, okay? Because the stock market isn't open yet. I do think we are going to see more declines in the S&P 500, in the Russell 2000, in the NASDAQ as well. This is the S&P from closing day on Friday. Let's take a look real quick at the Russell. We also saw that down and probably going to continue to move down. And probably the same with the NASDAQ. Now, it's because of Trump's tariff threats, and it's not just against Canada and China. It's pretty much all around the world. So if you're wondering why crypto prices aren't going up, guys, it's a broader market trend. This courtesy of XRP Soldier. And I talked about this the other day, but I thought I'd bring you guys another tweet thread with regards to this. If you're frustrated with XRP or crypto in general, this thread is for you. So sit tight, listen up. The market is disconnected from fundamentals, and this is a critical point, okay? We are not seeing real-world utility. It is still speculative, so markets are just kind of looking to each other and saying, okay, how should we react? And, they're all kind of reacting in the same way. Legal wins, new partnerships, adoption narratives are everywhere. So ETFs, regulatory clarity, institutional adoption is underway, and yet the market keeps bleeding. So why are we still going down? These are the reasons. The macroeconomic backdrop is the problem. So Trump's tariffs, guys, the global environment is full of uncertainty right now. Trump is about to drop 25% tariffs on key sectors like automobiles, semiconductors, and pharmaceuticals starting on April the 2nd, a huge blow to global trade. And why does it matter for crypto? Well, because capital doesn't flow into risk-on assets during uncertainty. That's the biggest reason. Big players hold back during trade wars, regulatory fog, or fiscal chaos. No matter how bullish the fundamentals are, price won't move up until macro does. And so XRP is no exception, as he says here. Number 4, but the playbook isn't new and it usually ends with a rally. So guys, this is what we have to look forward to. Trump's strategy follows a pattern we've seen before. In 2016 to 2018, he imposed aggressive tariffs. Global markets panicked, then negotiations kicked in, and finally we did see a major bull run begin across traditional and crypto markets. Why? Because once trade deals start rolling, and uncertainty fades, capital floods back into the market, especially to undervalued assets with strong fundamentals like XRP. So essentially what he's saying here is expect another big wave for XRP and for other risk-on assets. As of the time of this recording, we're seeing XRP just kind of holding up. I mean, luckily for us, XRP is robust enough to hold up against critical support levels. So I want to say $1.96. That is the biggest one. That is the high that we saw back in 2021. So these are the types of assets that are going to see the most inflows, according to XRP Soldier here. This is a game of chess with global markets as the board. Right now, we're in the fear and chaos phase, but the deal-making and rally phase is around the corner. So this creates one of the biggest gaps in crypto, okay? XRP is one of the clearest examples of this today. There's a massive disconnect between its potential and the current price. So just remember that if you do, or if you don't have enough XRP and you're thinking of loading up more. Plus, behind the scenes, the M2 money supply is at an all-time high, and the U.S. Hasn't even turned on the printer yet. So that is another point. Even so, Trump's message to Powell has been clear, urging the Fed to cut rates to ease the transition into the new tariff. So his final take here: is Trump a madman who doesn't care about the markets, or a businessman with a plan who knows how to leverage his position of power? In my opinion, the real edge now is patient conviction. Yes, it's frustrating to watch good news while prices stagnate or drop, but this is where wealth is built, okay? Understand the macro, trust your research, recognize when value isn't priced in yet. Are you positioned for what's really coming around the corner, guys? I personally am. I've been accumulating XRP for a very, very long time. And, if I didn't have enough XRP, I feel like I'd probably be accumulating more at this moment in time. But for more information on where I think markets are going, you can follow me at patreon.com/workingmoneychannel. All eyes are on Liberation Day. Trump says reciprocal tariffs will target all countries as India and the world brace for Liberation Day. So this is just a general article here talking about India specifically, but it's not just India. It's the entire world, really. As India and the world prepare for Liberation Day, U.S. President Donald Trump announced on Sunday that the reciprocal tariffs he plans to unveil this week will apply to all nations, not just a select group of 10 to 15 countries with a large trade imbalance. Trump has pledged to introduce sweeping tariff plans on Wednesday, a move that he has dubbed Liberation Day. He has already imposed tariffs on aluminum, steel, and automobiles alongside heightened duties on all imports from China. And he said you'd start with all countries, essentially all of the countries that we're talking about here. The White House economics advisor Kevin Hassett recently told Fox Business that the administration's tariff focus would be on 10 to 15 nations. With the most significant trade imbalances, though, he did not specify which ones. So here we are, guys, and markets are being affected. This has also gotten countries like South Korea, China, and Japan to agree to promote regional trade as Trump's tariffs loom. And this apparently is the first time in how many years? I think it's 5 years. The country's 3 trade ministers agreed to closely cooperate for a comprehensive and high-level talk on a South Korea, Japan, China free trade agreement deal to promote regional and global trade in spite of Trump's tariffs, of course. It is necessary to strengthen the implementation of the RCEP, in which the 3 countries have participated to create a framework for expanding trade cooperation among the 3 countries. And so this is what they're doing, guys. The ministers met ahead of Trump's announcement on Wednesday of more tariffs in what he calls Liberation Day. Seoul, Beijing, and Tokyo are 3 major U.S. trading partners, although they have been at loggerheads amongst themselves over issues including territorial disputes and Japan's release of wastewater. So they have their own issues. But now they're saying, they're getting together and they're talking trade because, well, they cannot count on the United States. And I'm finding that a lot of countries around the world are doing just the same. So is this going to affect markets? Is Trump going to decide at the last minute, at the 11th hour, to, alleviate some of these tariffs if he gets, a negotiation that he likes? Of course, guys, this is all culminating to where crypto prices are going to go. So we're just kind of hoping that this gets resolved fairly soon. At least you should be if you do hold cryptocurrencies. Michael Branch bringing this to our attention. Over 5,000 U.S. banks can now enter crypto markets as regulators lift approval requirements. So this is what I mean about the good news, right? We have the good news, yet crypto prices are remaining stagnant. But, all this matters in the long run because we do want to see an environment where crypto can be easily traded. And eventually we do want to see this environment where, the institutions are coming in and buying up cryptocurrencies and other digital assets. So the Federal Deposit Insurance Company, the FDIC, issued a pivotal policy update on Friday in Washington, allowing financial institutions under its jurisdiction to engage in crypto-related endeavors without needing to obtain prior approval. So boom goes the dynamite. Good Morning Crypto here also posting with regards to this. The FDIC clarifies process for banking to engage in crypto-related activities. This is going to be great for the crypto industry once we do see an inflow of dollars and that M2 money supply does grow. So through financial institution letter, so it gives you some of the details here. The guidance, here's the quote. The guidance affirms that the FDIC supervised institutions may engage in permissible activities, including activities involving new and emerging technologies such as crypto assets and digital assets, provided that they adequately manage the associated risks. By withdrawing its prior 2022 guidance, the agency marked a departure from more conservative oversight methods. Of course, during the Biden administration, there were stringent measures to really put crypto in its place. But now, guys, the FDIC directly supervises and examines more than 500 banks and savings associations for operational safety and soundness. And they're saying essentially, yep, we're good to go. With today's action, the FDIC is turning the page on the flawed approach of the past 3 years. And here's another quote. I expect this to be one of several steps the FDIC will take to lay out a new approach on how banks can engage in crypto and blockchain-related activities in accordance with safety and soundness standards. Good Morning Crypto also posted the reference here. This is directly from the FDIC's website, fdic.gov. So in summary, back in 2022, April 22, the FDIC issued the Financial Institution Letter, the title notification of engaging in crypto-related activities, which established a prior notification requirement for FDIC-supervised institutions that wish to engage in these activities. And now they are finally saying, okay, guys, we are approving it. I will link this in the description if you guys want to read in more detail what that is all about. But I wanted to thank Good Morning Crypto there. Michael Branch, of course, and who is this again? XRP Soldier, and the Kobasi Letter for, giving us that insight on markets. Now, guys, Q1 is done. Yeah, we're almost in Q2 of 2025 already, believe it or not. And Mr. Man posting this. The dam for stablecoins in Q1 has broken and the floodgates are open. Q2 is all about market structure. So expect to hear more from CME Group, NASDAQ and the DTCC. Yes, sir, the big boys are on deck. Thank you. CFTC derivatives clearing. The removal of these two key CFTC staff advisory signals that U.S. regulators are preparing for institutional phase implementation in Q2. So that is what's on the block now. Oh, mama, says Chad Steingraber. The CFTC just withdrew its staff advisory number 23-7 and number 18-14, which will now allow crypto assets, crypto digital asset derivatives, and clearing. So again, another huge step with regards to the institutional applications of crypto and digital assets in a real world setting, right? So tokenizing pretty much anything, right? The derivatives market, you remember how big that is, guys? Humongous. It's it's basically everything that they want to trade that they make up and put in a derivative product. The Commodity Futures Trading Commission's Division of Clearing and Risk today announced that it is withdrawing CFTC staff and that number there, review of risk associated with expansion of DCO clearing of digital assets effective immediately. And I guess we really can't really appreciate this until we can actually see how big the derivatives market is. Now, this I've showed this on this channel in the past. This is from 2022, so it's a bit dated, giving us Sam Bankman-Fried's net worth down in here. That gives us sports teams, cryptocurrency. So that was at the November 2021 peak. If one square here, I guess I should say one square equals $100 billion. So that is not a small amount. And we look at military spending. We look at currencies around the world, the gold market, world's billionaires, central bank balance sheets. Again, one square equals about $100 billion. Here we have the S&P 500. And remember, guys, these numbers are from 2022. So 3 years old now. So we got stock markets, we got global debt. Now, guys, look at this. This is global real estate, residential. But what I really want to show you guys, global wealth, that is just North America, Europe, China. Compare that to the Asia Pacific regions. Look at the derivatives market down here, okay? Market value versus notional value. And I'm going to just keep scrolling down here. You guys can see how big that is in comparison to any other market. One square representing 100 billion. So when we have the CFTC allowing crypto digital asset derivatives and clearing, the fact that that's a go means that XRP is now set up to really scale the tokenization of everything. So Graham Rodford's prediction, I don't know if you guys remember that, he's from Archax. He was saying, one day we could in fact see $50 trillion being tokenized through Archax over the XRP ledger. So this is the next step. I also wanted to mention this from Crypto Eddie posting this as well. Apparently this interview didn't get a lot of views. She says there's a lot of talk about Swift again lately. Under the radar interview, fewer than 60 views as of March the 5th, touches on Swift and Chainlink. This guy works for Swift and he talks a little bit more, not so much about Chainlink, but about the interoperability and how that is the direction Swift is moving in. Listen to this.
Well, thank you for having me on the show here. It's great to be with you. So I'm Nick Kerrigan. I'm Managing Director and Head of Innovation at Swift. So I lead a team of 10 who are keen and passionate innovators within Swift. I've been at Swift now something like 4.5 years. And before that, I had a 20-odd year career in payments and banking, most particularly focused in Barclays, where I spent 13 years doing strategy, digital payments, and then came into the innovation space.
Perfect.
It's a very broad landscape, and so we have to focus where we think we can add our value. And our value, I think, is around what we call interoperability, which is just a long word for saying, how do you connect these things together in a really effective way so that we can support that market to be able to scale up? We did a recent blockchain interoperability experiment where we worked with the Chainlink CCIP protocol, just as an example, so that we could be able to reach to public blockchains as well as private blockchains. So I think we will see a variety of options. I like to say really, interoperability is hard but essential. And there's probably not going to be any one single solution to it. But we're aiming at with Swift to be able to be a bit of a convener of that community, to be able to say, look, this is how we can make these things work together, and then also this is how we can have standards in this space. And so we recently published a white paper around digital assets, looking at potential areas for standards, and we think that's going to be really important as we go forward. And obviously, Swift has had quite an extensive role in the standards space space through being the standards authority for ISO 20022 in the payment space. And we're looking to kind of take that thinking about standards and bring that also into the area of digital and tokenized assets.
So first of all, not one single solution, but looking to turn to ISO 20022, that new standard, and really kind of running with it. Tokenizing assets, Swift realizes that now this is the solution. So how do we capture that? How do we lock in to those blockchains that are really going to make a difference? So guys, the XRP ledger, definitely going to be one of those blockchains. Again, the interview is down here in the link, and I will link this in the description of the video for you guys. So wanted to thank Sento Sumo Saba for posting that. Just remember, XRP just helped launch a $71 million tokenized securities platform. The market's response? Well, it went down 3.6%. So guys, just going back to that original point that I wanted to make at the top, macroeconomic factors are influencing the market, and we should not get too worried. Remember, White Rock is live on the XRP ledger, tokenized stocks, bonds, and golds with 3-second settlement. That's all positive news, all regulated, it's all real, but the price dipped because of sentiment. Welcome to crypto, folks, where game-changing adoption gets dumped on and memes pump 30%. I mean, unfortunately, this is still the type of cycle we're in. This isn't a hype cycle, it's a patience game. I could not agree more, so wanted to thank X Finance Bull for posting that. Don't let the prices get you down, guys. Look at the fundamental factors. We are waiting for a big influx of cash. And I mean, the tariff wars, once these are removed from the headlines, I think we will see a big change in the crypto market and in broader markets, but that's just my opinion. And for more information on what I'm doing this particular bull run, follow me, patreon.com/workingmoneychannel. That's where I give a more detailed explanation on where I think this market's going, my price targets, when I'm going to sell what coins. Patreon.com/workingmoneychannel. And please subscribe to this channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.